Morning and happy Friday. So the post that's going up on my blog today is about comparing loans, and this is how to compare loans to make sure that it's actually saving you money and not costing you more. So there are heaps of things you need to consider when you are doing a comparison on an existing loan or a future loan, and this can be any type of loan. So we're talking personal loans, home loans, or even payday loans. This applies to all of them. So you need to look at the features to make sure that, obviously that lender or bank is going to offer you the features that you need, like offsets and redraws and things like that. But the most common thing that people use to compare loans is the interest rate. So I want you, before we go any further, I want you to have a think about what your interest rate is and jot that down or have a mental note, because we're going to come back to that in a second. So there's two types of interest rates. There's the actual interest rate that you're paying, and then there's the comparison rate. So the actual interest rate is really easy. It is whatever interest that is charged to the loan on the outstanding balance. And that's really easy to work out too. All you do is take the loan balance, multiply that by the interest rate, divide it by 12, and that gives you a good indication of what you're paying each month in interest charges. Now the comparison rate, this is what you are paying by the time you've paid all fees associated with that loan as well as the interest. So there might be things like an establishment fee, a loan monthly servicing fee, or a package fee. All these fees, if they apply, get added to the amount to work out what the actual comparison rate is. So this is what you're actually paying by the time all the fees and charges have been added. So these two interest rates can be very different. Some lenders will use a really nice, attractive low interest rate to get you interested, but then have a lot of fees on the back end, which mean that you're actually paying more. And I've got an example up on the blog that will probably scare the pants off you, because it is a real-time example of what's current in the market right now. So make sure you check it out on the blog. But you really need to make sure that you are looking at the comparison rate, not so much the interest rate. So back before, when I asked you to jot down or have a think about what your interest rate is, was that the interest rate or was that the comparison rate you were thinking? If you're not sure what your interest rate is, you need to know. But if you're not sure on what the comparison rate is, that's even more important. So make sure you check it out when you're comparing loans, or even now, to have a look and make sure that you're not paying too much. So like I said, head on over to the blog and read it in more depth and read the example. But if you want to subscribe, you can head on over to the blog and input your details there. And that way you'll get some monthly updates, more hints and tips from me on how to save money, not just on your home loan, but on all your banking in general. But you also get special offers, market updates and things like that. And it's a great way we can stay in touch. As I said before, if there's any topics or anything that you want me to go into more depth on, just pop comments in below, or get in touch with me via email, PM me, whatever you'd like, and I'd be happy to cover off on it. Also, if you've got any good news stories, or if you've got any scary stories about your comparison rate versus interest rate, pop them in the comments below. I'd love to hear them. So otherwise, have a great Friday and enjoy the weekend.